not working out, probably have to get somebody to come over here and plug it in. I'm not kidding, in the back of the system, probably, somewhere back. Anyway, so here we go. What do you need for an A, B, C, D, E for exceedingly bad, F for failing, whatever you want to call it. I like E better, but could have kept the alphabet going, exceedingly bad. What does D stand for? Don't come back. Change your major or something else. Go away. That's what D stands for. Or do it again. You can do it again. So I get that too. By the way, I've had people get D's and then come back and get a B. It's really cool. And then they become CPAs. Okay? This is a hard class. It's a real hard class. Anyway, let's see. In class, how much time are you going to spend in class, you guys? A week. 3 hours that are not 3 hours. It's really 2.5. Am I right? Everybody's going to do that no matter what. Okay? How much outside? What do you think? How much outside? How about for an F? Who cares? Nothing. Okay? Why bother? Don't even show up. Don't wait. D? In principles, I would have put 3 down there. What do you think it is here? 6. C? D? A? I don't know. Hold on. What kind of grade did you say you got? No, back there. He's had it before. He's a ringer. A minus. How many hours did you give me? Do you know?
At least about two classes.
No, I mean in this category, outside of class, how much time did you give me? How much time did you spend studying for this class?
You mean per week?
No, for anything. Per week's good.
A week about 5 hours.
5.
Not a lot.
No problem. And he's only in class 3 hours. You only do the hours a week. And you got an A minus. See? That's all you need. You get an A minus. If you speak 5 languages, sure. And you already have 2 university degrees.
One.
Only one. What was it in?
Economics.
Yeah. So see, if you're a real efficient student, you can do that. I just did that for fun. So will some of you be less than this? I don't know. I wouldn't start that way. So don't get. You can pretty much guarantee that if you do that many hours, you'll probably pull into those categories. It'll be all right. It's not a big deal. You just need to know everything that's in the book, and everything that's in the homework, which is also in the book, and everything that's in my imagination, which isn't in the book, and isn't in the homework, and isn't going to be covered in class. It relates to it. It's accounting, right? Be ready to go. I'm going to hand you problems where you won't have a clue what the hell I'm asking. And you will figure it out, and you will give me answers. Just like on the CPA exam. They're old CPA exam questions. A lot of them are. They're questions I wrote based on old CPA exam questions. Got the idea? And you'll get really ready to take the CPA exam. You'll get ready to work in your career. There aren't any answers sitting there to look at, right? Okay? But in the meantime, there are a whole lot of problems on an assignment schedule. You can work as many problems as you want. I have actually had students, what's Mahoney's first name? Jeff Mahoney. Jeff Mahoney is a CPA from here in town. He's a JD CPA, he's an attorney, he's also a CPA. And he took intermediate accounting from me and whatever. He not only read every page, he did every single problem and exercise in the book. And then he got a CPA review manual, and he did all of the problems in the CPA review manual. And then guess what? He passed the CPA exam on his first try with real high scores. So what? He already knew what the answers were. He'd already done all the work. Do as much as you want. And you sail through law school. He's real successful. He's just a crazy person, right? Or so much. You can do whatever you want. Okay? This is career. This is not a class. This is a career. Okay? So decide you're going to do it, and go for it. Really dig in and go for it. Really go. Okay? And all of you got it in you. How many classes do you have? Maybe 5. Are you going to work 15 hours a week per class? Or 18 per class? No, just for this one. Okay. What's going to happen when you have 2 accounting classes? So, by the way, my job is to get you so you work hard. What's Alan Deck going to do? He's going to stand up here and tell you how proud he is of you. That's what Alan does. He did that at home before, right? I'm so proud of you. Okay, whatever, Alan. Okay, anyway. I think he was children or something. Anyway, so he's proud of you. That's reality is, he's going to be really nice to you, and then he's going to give you an exam that is virtually impossible to do. That's what's going to happen. And then he's going to laugh at you when you get to your D or your F and say, why don't you start working a little bit? Whole different environment. But he's going to pump on material. I'm going to give you theory stuff. You know, this is the theory. This is kind of how it works. It just drives you crazy. Because you're thinking, no, I want insurance and numbers, right? I want numbers. Give me some numbers. Well, he's going to give you a bunch of numbers, but so many of you won't believe it, and he's going to expect you to know the theory with them. So I'm going to do a bunch of theory, a little bit of numbers, right? He's going to do a whole bunch of numbers. You have to know the theory. You can't do it, but he's not going to talk about the theory as much. And then, God forbid, you hang on to 313. That's 212. 313 is Richard Schrader. Richard Schrader likes to be the smartest person in the room all the time. Have you met Richard yet? Yeah, you got to meet him. It's really fun. He knows everything about everything. Just ask him. He'll tell you. And he likes to come into class every day and prove that he's so much smarter than you and he knows so much more than you. So he tries to talk about 8 feet over your head. But he will deliver a tremendous amount of information that you can just soak up and soak up and soak up. He's doing pensions and stuff like that, and leases and just horrible things, right? Towards the end of this intermediate type sequence here, this financial accounting sequence. But I'll tell you what, when you get done, his exams are impossible too, of course. But when you get done with me and Alan and Richard, you will be able to pass the financial section of the CPA exam. You don't need, oh, by the way, how much do you need to study for the CPA exam after you graduate from this place? You have a 3.5 or above? Probably not at all. I'm not kidding you. Like 4. Unless you just like getting 90s on the CPA exam for some reason. I don't like to work enough to pay. I care less on the scores on the CPA exam. What's perfection on the CPA exam, guys? 75% is passing. That's perfection. On my exams, if you get 75%, what is that, an A minus? Something like that? 80's an A? Yeah. You know, you gotta deliver to get 75. Okay? But you'll be ready then when we're down the road. Those of you who are certificates, what are you guys here sitting here for? You want to pass the CPA exam, don't you? That's what you do. You'll be ready. Just take it seriously, keep going, don't let up. It's been a long time since you had your principles. You've never had principles. Maybe it was wonderful. Yeah. Okay, anyway, but possible. Anyway, well, Bergamini over at St. X, anybody go to St. X? Yeah, he does a good job at principles, doesn't he? So you see, you just walked right through mine, didn't you? Yeah, I know that. Okay, but you did too? I see. You did too. Yeah, anyway, see what you want to say. Yeah, anyway, it might work out. But what we can do is we can just pound on that stuff. Keep your principles book. Find a principles book. You'll be reading that while we go. It's not a bad idea. Did everybody keep their principles book? I hope so. You don't want to read in it. Because this book, it looks long, doesn't it? I heard your version of it looks really long. But here, oh, this is cool. This semester we are only going to do, I don't know, less than half of that book. And then Alan's going to do about as many chapters too. And then I have one, you saw that on weighted average cost of capital, capital asset pricing model. Those who are going to be finance types in here are going to love that because it's really finance, not accounting, whatever that means. It's using numbers, so it's now it's false, right? But we're going to value companies. It's going to be really cool. It's going to be fun, right? It would be fun today to be valuing companies. You know why? Almost all of them are worth more than they're selling for today because the market is irrationally low. What happens when the market is irrationally high? When you value the companies, none of them are worth what you're paying for. Of course, what you always have to do is do what? Buy stock because you don't know how long it's going to run up and you don't know how long it's going to run down. The worst thing you can ever do is sell what? When it's low. When do you want to sell? When it's high. But it's dangerous to sell when it's high because what do you have to do? Buy something else, right? So the best thing to do is like Warren Buffett says, you buy a good company, you keep it for the rest of your life. Really boring. And if it ceases to be a good company, what should you do? Get rid of it and buy a good one. I like, you know who Will Rogers was? Will Rogers, you know, entertainer, statesman kind of, you know, poet. Anyway, Will Rogers had wonderful sayings, and this one's great. It's in front of an investment book I had in my PhD program. And he's got a surefire way of making money in the stock market. Buy a good stock, wait for it to go up, sell it, and take your gain. If it don't go up, don't buy it. Right? That's what like Warren Buffett says. We're going to value companies, you guys. Do we really know what the company's worth when we value it? I knew how to value the company and I was always right, sure as hell wouldn't tell you. I value it, place my bets, win, because I'd be right, nobody else is. Win every single time, capture all the wealth in the world, and we'd be done. So this is the game. You are trying to get a better estimate of something's value than everybody else. And that's not just for finance people, that's for accountants, because we do the same thing. Okay, what are financial statements for? Why do we prepare financial statements? She's going to do it because it's going to pay well. No, that's not why we do it. Oh, it does pay well. Okay, but that's not why we do it. You guys are going to prepare financial statements anyway. You're going to have staff working for you, prepare financial statements. I don't know if I've ever prepared a financial statement in my life. I suppose for nonprofits, they're real little. Never in my career. If people working for you do that, computers do that. So what is this about? Why do we prepare them? Why do we have the computer prepare them to make sure they're right? What's the deal? What are they for? What are you going to use a financial statement for? You could say to decide which company to buy, which company to sell. True. Okay, but it's more complex than that. What do you really do? You try to predict what's going to happen in the future. I know what the company's stock is selling for right now, right? That's not of any value whatsoever. Is it? Who cares what it's selling for right now? What do you care about? What happens next? I don't care about the past, I care about the future. In fact, I'm always annoyed. Every time my wife does our tax return, God forbid me do it, but every time she does our tax return, it's pretty simple. Just give them all your money, right? And you know what you made and you can send it all in. But every time she does her tax return, I'm always pissed about the extra money I made every year. Why did I make that money that we didn't have any tax withheld on? Because now what do we have to do? Send the government the money. Wouldn't it have been better if I made less? We spent it all anyway. So I don't like the history side of this thing. History is just what happened in the past. Nobody cares. In a stock price on a company, that information is already in the stock price. Everybody knows what happened in the past. What do they care about? What happens in the future? What did you predict which companies are going to make more money in the future and which are going to make less? What if you could predict which stocks, therefore, are going to increase in value and which are going to decline in value? Would that be valuable? Oh, hell yeah. So if you go into finance, don't just have somebody say, oh, here's the stock to push. Tell everybody this is a good one. You're worthless. I'm sorry, you're worthless. And that's what most finance degrees do for you because they don't have any accounting in it. Dan Bauer, when he put together this program, he and I, when we designed the finance program here, what's the deal? What did we do? We plugged in a whole bunch of accounting and economics, and it's just hell to do a finance degree. But then what happens to employers when they see what's in that finance degree? They want to hire you. Because you got accounting, econ, and finance, you layer the finance on top of all this stuff, right? The accounting and econ. By the way, I wish we had more finance and econ in the accounting degree. Maybe we should just have one degree that's all put together. In fact, I argued for that. Let's make it just one big thing, right? And then we can still compare stuff to qualify for the CPA. Okay. Anyway, so what I want to do with these financial statements is predict the future. What is anything worth? Somebody tell me what anything is worth. What is anything worth? Okay, if you get run over by a truck and you leave here, who should be run over by a truck? You should. You know, you got to die. Okay, you get run over by a truck. You ever do this with women? With men, it's kind of bad. Beautiful women dying would be terrible. You will well. Okay, anyway, yeah. Don't get run over. Okay, I feel really bad. What are you doing this then? Okay, look. If he gets run over by a truck when he leaves here, what's his family going to sue for? I did this in principles with you, right? What's he going to sue for? What's his family going to sue for? I know he has infinite value. He's precious, right? Your family, it's true. Okay, what are they going to sue for?
Isn't it like what's going to be worth throughout, like, your life?
Yeah, which is what? What's he going to be worth throughout? Actually, it's what it's worth now. But it relates to what he's going to do throughout his life. What's he going to do throughout his life? Let's hope your parents are praying for this word. He's going to work, right? And he's going to generate income, which is going to come in the form of, which is money is land, building, equipment, everything. Everything's made in terms of money. to generate a whole bunch of cash in the future. Okay? So what you're going to do is just add up all the cash he's ever going to make, and that's what they're going to pay. You guys believe that? If so, I want to do business with you. I'm going to get infinitely wealthy. You're going to be bankrupt. What's the deal? I can take all your money away from you. And you don't believe that. What are you going to do? What is the value of anything, any asset, land, building, equipment, any liability? Because you know what? A note receivable for one company, a note payable for the other one, they're valued exactly the same amount. Now they agreed to, loan the money, borrow the money. They even agreed on the interest rate. Does that help you guys? I want you to think. Come on, you got to think. You're disappointing me. I already told you this. Let's go. I told you this at 102 this summer.
Oh, is it what people are willing to pay for it?
Well, it is true. If we go in and we're going to buy a new car, we're going to buy my wife's new car. No, 10 years old, 145,000 miles. She has a new one. The Volvo is going to last another 145,000 miles. It's ridiculous. Anyway, I'm going to do it. I have no power whatsoever in our relationship. You do that, right? Absolutely. I'm afraid of her. Okay, anyway. So, and you would be too. Okay. I told you this is love too. What's the deal? What's the deal? Yeah, if we go and we negotiate for a new car, you and me, and they're exactly the same car, and you buy yours for $26,000, I pay $35,000. How much was yours worth? 26. Mine's 35. I agree, and that's what we'll record. I got ripped off. You got a good deal, but still, that's what they're worth to us apparently. So that's what their sale in your case is 26. In my case, it's 35. Your asset is 26. Mine's 35. Unless I think there's a permanent impairment of value, then I'll have to write it down, which happens when the business is by away and they pay too much. Goodwill, it has to be written down. Makes sense, doesn't it? But yeah, it's what people would agree on, but that doesn't do us any good. I have to value the asset before I decide to buy it. How much am I willing to pay? And I have to value the asset before I sell it. When UPS buys an airplane from Boeing, doesn't Boeing have to know what they're willing to sell it for? Yes. Doesn't UPS have to know how much they're willing to pay? Yes. And you know what's really funny is they both estimate what it's worth to the other one, and they get an estimate that's fairly close together, and they start estimating, or they start negotiating with it. They get an estimate, and they're usually pretty close together. Because what Boeing does is guesses how much UPS will be willing to pay, and what UPS does is they guess how much they'd be willing to pay themselves. So they both have an estimate of that, with different information, of course, right? Because guess what? UPS knows their own numbers better than Boeing does. But Boeing's pretty good at it, because Boeing sells airplanes all the time, huh? UPS always also factors in how much Boeing has to make, or how little they'll be willing to make. Boeing factors in exactly the same thing. Intelligent people, figuring it out. Okay, figuring out what? How much it's worth. How do you know? What did we say about it? Any asset or any liability is worth what? Value a bond for me, come on. And the market rate has something to do with it, absolutely. And the stated rate has something to do with it, doesn't it? Because the stated rate tells you what? What the interest payments are going to be. Right? Oh, and then there's a lump sum at the end, too, on a bond, isn't there? So there's the interest payments and there's the lump sum. What do you do with those to find out what they're worth right now? The market does it constantly. Bond prices are changing every day. How do they change? What happens? What changes? One is there's interest payments, so there's fewer interest payments coming, so there's less cash flow in the future. Oh, the amount of cash flow. Right? And what else changes?
Present value?
Okay, I'm going to make this. What's that?
Present value.
Present value. What you want to know is the present value. The present value is what it's worth. Any asset on your balance sheet is worth its present value. Duh. Any liability is worth its present value. When you get run over by a truck leaving here, you are worth your present value. Everything's worth the present value. When I sell something, it's worth its present value. When somebody buys something, it's worth its present value. You don't just take whatever price they ask. Imagine that. Wouldn't that be cool? I'm going to start a business if that's the case. It'll cost me $2 to make a product. I'll sell it for $100,000. I'm going to get rich fast. People just give me whatever I want. No, they won't. Right? They are going to figure out how much they need to pay me. And I'm going to figure out how much they need to pay me. And when will we do business? When those numbers match. Right? You don't get better than that. No, I don't want that. Okay. I want to know the present value. What do I need to know to get the present value? Future values. It could be a future value some number of periods amount, some number of periods from now. Right? But he's not going to have a future value some number of periods from now. What's he going to have? So it'd be useful to know that. The face amount of the bond, that's a future value some number of periods from now. Remember that? See, you guys learned how to do this, but you don't know what you're doing. What we're going to do now is we're going to use what you know how to do, refresh that, and you're going to know what you're doing. Big difference, huh? Knowing what you're doing versus just doing it. Okay? All right, future value number, some number of periods from now. Yeah, that'd be good to know in order to calculate the present value. What else is there? He's probably going to make different amounts of money on a year after year after year after year, and each one of those is future value sometime in the future. But you know what? He could have, instead, the same amount of earning every period. What would that thing be, guys? That'd be an annuity payment, right? So what you probably have is an annuity for a while, and then you get a raise, and you have an annuity for a while, and you get a raise, and you have an annuity for a while, and you get a raise, right? We could add up all the cash flows he's ever going to get out in the future, right? And we could discount him back to now. But in order to discount him back to now, what do we have to know? Not just how much. These both are how much cash. Okay? And you're thinking, God, I didn't even read this stuff, and he's talking about it. Sure, you read this. You just didn't realize you did. Okay? I read it. That looks like it to me. Okay, that's this stuff. Okay, what else do you have to know in order to find out the present value? I want to know the present value here, you guys. What do I have to know besides how much cash flow there is in the future? How much cash? What else do I want to know? Interest rate. Okay, so he wants an interest rate. I or R. Okay, I want to know what that is. And what does that represent? What's in the interest rate, you guys? In an interest rate, what is it composed of? Risk. Okay, so we've got expected risk. You know what? I don't know real risk. I know expected risk. Nobody knows real risk. You're guessing. This is the gamble, is the risk. What else? What? Oh, when. That's a whole different issue. That's the N here. But that's good. That's cool. I like it. So, when. When do we get the cash makes a difference? Okay, we'll come back to that. You're right, but that doesn't have anything to do with the interest rate. Well, actually, it could. And later in finance classes, you'll pick that up. It could. The longer the period, you might want more interest. That sort of thing. Okay, so a time factor built in the interest rate. So it could. Okay, what else? We take the risk-free plus the expected risk, right? What's the risk-free? That's what this is going to be. Risk-free. How much we would earn if we invested our money at no risk, like in a 30-year treasury bond with the federal government, or a 5-year treasury bill or something with the federal government, U.S. federal government. Risk-free. Okay, that's as close as to risk-free as we can get. They'll print money if they have to pay it, right? True. Okay? So, or tax people. No, we don't do that. Maybe in another country we wouldn't tax people. Okay, anyway, so what's the deal? Risk-free is composed of two pieces. What are they? Do you guys do brain dumps after 101? Yes.
Stated rate and inflation?
Yeah, expected inflation. We'll go for that. The other one's not stated anywhere. You're sort of mixing up bonds with it. But what it is a true or a real or a nominal return. And most people, most finance and accounting and econ theoreticians think this is 2 to 3% at any point in time. This is whatever it is at any time, right? We keep thinking inflation is going to fire up, but it hasn't, and it hasn't, and it hasn't. Because we don't think the economy is really recovering or something, but anyway, it hasn't. So risk-free right now is about 3%. So what's expected inflation right now? 0 to 1%, because we haven't had any for a long time, okay? Because when you add them together, you have to have risk-free, okay, which is around 3%. But you know what? If I went and got a credit card today, I bet you I'd pay maybe, I don't know, 4 or 5%, and risk-free is 3. So how much are they charging me for risk? 1 to 2? Yeah. What if you go get one? Not with your parents' signature, with yours. 10, 11, 12, 18, 24, right? Depends how old you are and how much credit history you have and all that kind of stuff, huh? Right? Yeah, but it'd be more. How come? What's different? Is the true return different for anybody? No. Every borrower is the same. Is expected inflation different for anybody? Theoretically not. Although really mine is, because I only buy bourbon, wine, and beer. So my inflation rate might be different than yours if you buy a whole bunch of different things. In real life, of course, different companies have different inflation rates, right? But we sort of lump it all together, at least conceptually. Okay, what's the big thing that would be different over here? And if you got somebody with an 18% rate and somebody with a 10% rate, what's going to be different? If risk-free is 3%, right? What do you got over here for expected risk? 15% on the first one, right? 3 plus 15 is the 18. What do you have on the other one? Only 7. They're more than twice as risky. That's the idea. Okay? So why am I talking about this? What does this have to do with accounting? Everything. How are you going to predict the amount of cash flow? You're going to use an income statement and a cash flow statement. Mostly income statement. To predict future cash flows for companies. That is the widest use of an income statement there is. To predict future cash flows. Oh. How about the timing of them? Same thing, balance sheet and cash flow. How about the riskiness of them? Balance sheet, debt to equity, income statement, what kind of business is you in, what are you doing, the financial statements. We communicate to the market, right, what happened in the past so they can predict the future, right? We're not going to predict the future for them, that's the game, right? No, if you're in finance, that's what you're doing. That's a big difference. In finance, you're trying to predict the future for them, right? So I think this one's going to do real well, and why? Would you hate to try to sell me stock? You have to tell me why it's a good stock. Don't just tell me it's a good stock. Give me a break. Why? What's better about that one than another? I want to know why. I want to know exactly why. Exactly what you calculate. Personally. Calculate. Not what some PE ratio is. I can care less what a price earnings ratio is. What's the price earnings ratio? So what it's selling for divided by the earnings last year. So, tell me what's going to happen next. Now, could a price earnings ratio predict what's going to happen next? Yeah, with enough knowledge to have yes. It's pretty good measure. If you really read those statements, you really understand them, and you really understand what's going on in the market relative to that company and what's built into their stock price. And you really have a good idea what's going on, you might draw some insight out of a price earnings ratio. But how about looking at it? Price earnings ratio of 10 to 1 and 1 to 5. What does that tell you? Absolutely nothing without more information. Nothing. Is 10 better than 5? I don't know. It might be 10 because they had no earnings last year, and in the future they're still going to have no earnings. And the price just haven't adjusted downward yet. Or it could be 10. Why? Because everybody's excited about the stock, even though they're not earning anything yet. It's going to go crazy. The earnings are going to go sky high. Ah, I like that one. Do you mean 10 could be good or awful? Yes. Got it. So what do numbers mean in financial statements? Not a lot, unless you understand what they are. Same deal, right? So you're communicating what's going on with the company in these financial statements. That's what you're trying to do. So you mentioned when. Gentlemen mentioned when you did? Yeah. Okay, when. All right, why do we care about when? Okay, I'll tell you what. I'm going to hire you next year, and you don't have to do anything illegal or immoral or anything. It's not even unpleasant. It's kind of nice stuff. Okay? And you are going to make $300,000 next year. You want the job? I'd like you to quit school for a year. 1 year deal. You get $300,000. You live in a nice place and you have a pleasant job. Everything's cool. It's not illegal or anything. I'm not really doing this. I don't have $300,000 to do that, of course. But what if I gave you that deal? Would you like it? I'm going to pay you $300,000 just for one. You like it? You're going to take it. He doesn't want it. Do you want it? $3 grand? $300 grand? He wants it. Do you want it? Whatever you want. For this 1 year. You get to come back to school and do whatever you want after that. Or you take the $300,000 and invest it to lever it into future earnings. My God. No greed in here? Do you want it? Yeah. Look at these guys in the back of it. Okay. All right, here's the deal. Any rational person would want it unless what? They already have too much money. They don't need more. Nobody's sitting here like that. What's the deal? Why do you care about time? What if I suggested to you, oh, I'm not paying you next year. I'm not paying you for 100 years. Now do you want it? Let's discount 300,000. Let's say 10% for 100 years. How much is that worth? Almost nothing. I'm paying you nothing. Almost. Right? So you feeling that Richardson's gonna rip me off. You did, right? Yeah, you ripped me off. So do you care when it happens? Do you care when you get your cash? Of course you do. And people structure deals like this all the time. You know what they'll do? They'll have you put up your cash now, and they'll give you cash a long time from now, and they'll give you a lot more. And it looks like you're making a fortune, but when you calculate the discounted present value of the deal, it's a mess. It's horrible. Your internal rate of return is nothing. You're getting ripped off. And people buy into it all the time. The whole industry's based on it. People want immediate gratification of getting the money, don't they? Right? Cash now. If you're willing to wait until later, you can get real rich. If you have to have it right now, you're in trouble. Okay? All right. Anyway, that's why we're doing these financial statements. So let's take a look. Let's do this. Let's take a look on page 62. The end of chapter 2. When do we have a quiz? Next Monday? I'm really slacking for you guys. I'm a nice guy. We're not going to do a review session for this quiz because I'm going to just tell you what's on the quiz and what you need to do for the quiz, and then it's really pretty straightforward. We are going to have a review session, and if you look at the syllabus, I guess I didn't talk about the syllabus at all. You see where my office is, Oregon Hall across from Mr. Schrader in the dungeon, right, over there at Oregon Hall. There's my cell phone, there is no office phone, there really is no office phone. They haven't put a phone in my office, and I'm not asking for one, because I never answered it. Call my cell phone, it's right there in that backpack right now, you'll actually find me, okay? So, and there's my Bellarmine email. Use Bellarmine email for what? If you're sending me documents, okay? Send me a document and you want to attach it, please don't stick to my phone, it's a pain, right, to get it printed and stuff. So send it to the Bellarmine one. And the Bellarmine one's fine anyway. If you want to get a message to me faster, the Gmail one works great. Or what's even better than that is texting. Fantastic, that's great. Or you can call me. If you're working on a problem, don't call me after 10 o'clock at night, okay? My wife goes berserk, okay? She doesn't like that, so. Okay, so call me anytime before 10 p.m., any day of the week, I don't care. If I'm around, I'll answer the phone. If not, I'll get back with you. So if you're working on something or you're working in a group or something on something, give me a call, okay? And I'll give you a hard time. Anyway, and no answers probably, but you can. Okay, so feel free. I don't have any office hours because I'm going to be with you guys and my one-on-one students from 2 to 4:30 over here in this building, a whole bunch. You look at that review schedule. Grab me before, after, during, it doesn't matter. Nobody's going to stay for 2.5 hours anyway, right? Okay, probably. If you want to, we will. If people want to leave, great. By the way, if nobody shows up for these review sessions, I go home. I'm not going to talk to the video thing by myself, okay? So if one person shows up, this is really awful. Last year, I had one student, one class who always came. In one-on-one tutoring. He didn't need it really, but he came. I guess people at home kind of watched the videos. Funny now, they didn't have anywhere near the points at the end of the semester. He did, but then what the hell, you know, you get out what you put in. So, be here. I strongly suggest it. What if you can't? So, watch the video, right? Schedule your life so you can be here if you can. Okay? Schedule your life so you can be here. And I don't mind doing those with you at all. They're really fun. I enjoy it. Okay, so anyway, materials, you got it. Oh, the Klein book? Who has a Klein book already? You have one yet?
What?
Who has the Klein CPA review manuals? You have the Klein CPA review manuals yet? Or this CPA review manuals? You want to be a CPA? Get these. Get the whole set. They will, Bellarmine has a license, an arrangement where you get it for half price. So you want to tell them you're a Bellarmine student and they'll give it to you for half price. If you buy all 4 books, which is like $1,200. If you buy all 4, they'll give you a CD-ROM that has thousands of CPA exam questions on it. Really useful. Guess where I get all my test questions? You can see yourself, have this or not. I used to require it. When I was chair around this place, everybody got it. Okay? And it passed the CPA exam too. So really good idea to get this. You can talk to David Collins, that's the chair, about ordering it if when you contact them, it doesn't work. Ask him. Yeah, I don't know if he's got it set up for this year yet or not. Probably not. Okay? I was going to say, the book, that's going to last for 2 semesters anyway, and for part of 313. In 313, you'll have another book to go with it. So you don't buy a book for 212. So just think of this as 212's book. Okay? But I'd buy all four. You're going to use them anyway. Oh, and will they become obsolete before you graduate and take the CPA exam? No, because they send you new supplements every time something comes out. Anytime something's new, they'll give you new materials for free. Because they want you to buy them all right now, of course, right? So great idea, just a great idea. If you plan on being a CPA, for crying out loud, buy this stuff. It's going to make every single one of your classes easier. There's one on financial, there's one on accounting and reporting, ARE, there's one on, I don't know, whatever the legal thing is, and there's one on business stuff in general, right? So there's 4 different books that cover the whole CPA. Really good stuff, really good stuff. I like the BIS better than the GLIME, but the GLIME is a lot cheaper than the BIS. Okay, so you keep yourself on. Okay, anyway, guys. So, when are we having the first quiz? You can read through all this stuff. I know you know how to read. 70 in class closed book quizzes, right, guys? Okay. What happens if you miss it? 1. We're throwing 1 away. That's fine. What if you miss 2? Points get out of your final. 3 take-home exams. You can't miss them, right? So everybody has to turn in the take-home exam. Closed book. Can you trust each other not to cheat? They'll look something up. You will not do that. Can you trust each other? If not, you're going in the wrong profession because we totally have to trust each other. Wow. It's an interesting profession. You have to trust each other. They have to be able to trust you. And if we cannot trust you, please leave. If you would actually cheat for a few points on one of these exams, or a quiz, or a final, will you take $1 million bribe later to falsify financial statements? The answer is, of course you will. And we don't want you. Okay? Am I naive and think that nobody ever cheated in their life? Of course not. I know people cheat. People get rich cheating. We have some politicians right now running for president, some of whom have really shady backgrounds, who I would not invest with anyway. Because I know their thieves, because I know their backgrounds. Read about it, looked at the deals they did involved. No way. Right? I wouldn't trust my money with them, but can we trust you? Yes. Yes. You know what? I always end up telling intermediate classes that either Bellarmine students have a high level of integrity or they aren't even capable of looking up the correct answer. Got to be one or the other. That's a joke, right? I know you can look up the answers. Well, some of them, right? What if I ask you for a definition and the definition's in the book? Is that a little temptation? Right there in the book. Is there any temptation? Yeah. Will you do it? No. What if you give me word for word the right definition? Do I know whether you looked it up or you just wrote it down? Actually, I think you probably wrote it down because if you looked it up, you feel too guilty. You'd probably make a couple words wrong just because you wanted to make sure I didn't think you were cheating. You know, human nature is, right? So probably the perfect ones are just crazy people who memorize every single word. You don't have to know every single word. You just have to have the keywords. Because I can't remember anything, so you know, I make you go too far overboard with that. But I want you to know enough that you'll be a little comfortable with the CPA stuff. So anyway, integrity is everything, you guys. Anyway, and then we'll do an in-class closed book final. I guess that if anybody were dishonest, I guess that'll nail them. I hope so, anyway. Anyway, attendance policy is for God's sake, come to class. Anyway, whatever. Use your own responsibility on that stuff. Okay, you're paying your money. You take away what you want. Everything's optional, right? Withdrawals in police. Remember October 21st if you want to drop. No big deal, drop the class. If you want to drop, do it by then, please, because otherwise I have to go beg David Collins to let you out of the class. Right? So, and you don't have to be passing at that point right now. Okay? I know that's a violation of university policy, but I don't care. So, it's silly. You're supposed to have at least a C minus to drop, or a C is. If you have a C, why would you drop? Class like this, who in their right mind would drop this class if they have a C? You're almost done. Anyway, so October 21st. Yeah, our first quiz is the 31st, I guess, which is this, or next, what, Monday? Okay, it's on chapters 1 and 2, so I'll tell you right now what's going to be on it. There's a grading scale, okay, sound good? Like I said, you know, 75% if you pass the CPA exam. If you get an A minus, you get 75%. That's pretty generous. Anyway, attached to the back of this thing, you guys know about Moodle. You've been out on Moodle. There's resources out there you can use. If you miss a class, watch the video of this semester, or there's 2 earlier semesters out there, if this is not recording, right? You know, so that kind of thing. Here's a case, Jill Pelliver, back there on page 5 of the syllabus, and thereafter. This is a case that I wrote with Dan Bauer and David Collins, and it gives you weighted average cost of capital, capital asset pricing model in what we think is a pretty user-friendly form, and that's going to be one of our chapters, is this paper base. Okay, I'm going to read this, and then we're going to value companies. I think I suggest, I would do the same ones. I think I suggest Target and Yum Brands or something. They're pretty straightforward. So we're going to actually value them for class, and then I'm going to give you a quiz where you value them, I'm going to give you a test where you value one, and I'm going to give you a final where you value them. Sound like fun? Actually, it is. It's kind of cool. You can value the companies you work for, but you have internships, right? Oh, by the way, if you don't have an internship yet, should you? Of course. By the time you're intermediate, how many of you know who you want to go to work for? You graduate? Oh, only about 1, 2. Oh, man. Okay. Oh, well, you don't already have to have it set up. I mean, just you're getting an idea of who you want to work for. That would be a good idea. When is the first accounting association meeting? It's tomorrow, during free period. Are you going to be there? That should be unanimous, including certificate students. Get there if you can get there. Be your lunch, right? Or whatever it's worth. Okay? Free period is 10:40, 12:15, and it's, where is it going to be? Somebody have it down? I don't know. Although SC 232 or 234 or something?
234.
Yeah, and over in the School of Communications, which is the dining hall thing over there, right? Be at that. This one we're going to tell you what you need to do all semester. This is going to be the only time we talk all semester about what to do, because firms are coming every single other meeting. You can meet everybody who hires accounting graduates in the region, right? All the big 4 firms, all the large regionals, all the large locals, a whole bunch of corporations. By the way, if you're going to be a finance major, it's a good idea to know these CPA firms, seeing as they're the CPAs for every single company in the country. In the big 4, all the large companies. You think if they could hire you, that a corporation might hire you because they're client? Yeah. So meeting people is really important. It's not who I know, it's who you know. Get out there and meet them. Okay? We'll introduce you, and we'll introduce you, and we'll introduce you, and we'll introduce you. Show up, look good, not dressed too well, but you know, look. Yeah, better than me. Put on khakis or something. You know, look better. Okay? Look pretty good. Like you're going to work for something that you are. Corporate capital. Show up, greet them, thank them for coming, shake their hand, get eye contact, have them know who you are. Ask questions, we'll talk about all that stuff. Okay, but you want to be doing that. You could either be interviewing with a friend of yours when you interview for your first job, or you can be interviewing with somebody you've never seen before in your life. Which one sounds better to you? What if you're interviewing with a friend of yours that you know they already want to hire you, and they know you already want to go to work for them? Because both of you pretty much told each other that. What a nice interview that is, huh? What's the starting salary going to be in these firms, for the most part? Otherwise, you won't take the job. If you have a decent GPA, 3.0 and above, what's going to happen? By the way, below that, you still get jobs. They just won't pay as well. Okay? What's the salary going to be like? Sorry, 50 grand. 5 years out, 6 years out, how much? Maybe 7. It'll double. Again, 5, 6, 7 years. What will happen again? It'll double. You guys know what a flake I am. Disorganized, haphazard, right? Absent-minded professor. You're looking at the guy who did that. Okay? So, but let's see, how old are you going to be? How old are you going to be 5 years from graduation? 27, maybe? 50 at 22, 100 at 27, then what? 32? Is that right? 200. Am I kidding? No. I did. It wasn't that many dollars, because there's been a lot of inflation. I started out at 9,600 a year, which is 50 now. But it's the same thing. It's kind of nice. It's good. It's got the fun. You control your own life. Okay? It's not all about the money. It's about having fun. It's about having challenge. It's about having opportunity. So, by the way, if you think 50 is not very much money because your parents make 200, ask them if they started at 50 or at 200. Bet they didn't start at 200, right? It's what you're making, right? What you're going to be able to do. And it's real, okay? It's real. Or if you want, you can go to work for a nonprofit and never make any money, but do a really good job for society, and I think that would be absolutely wonderful. But if you're going to take that nonprofit job, I'd really like you to know what you're doing so you can provide as much benefits to society as possible. How does that sound to you? Dan Bauer and I actually wrote a couple papers about that. That we use present value techniques, right? To value social projects that nonprofits do. It should be using the same methods for making decisions. Really? They probably should. It doesn't make sense not to. Okay. Anyway, what time are we supposed to leave? Are we past time? No, that's 15. Okay, I was going to say, it couldn't be, could it? Okay. You'll never let us leave early, will you? You know, what I've done in some semesters is we just start whenever everybody can show up, and we just keep going until everybody leaves instead of doing review sessions. That's all right, too. However you guys want to do it. When the room gets empty, I walk out, you know, that kind of thing. Stick around otherwise. I really enjoy doing this stuff. When we start getting into some meaty material. Oh, chapter 3. Talk about that. We're going to do a quiz on 1 and 2, and then chapter 3 is principles of accounting in 1 chapter. Good with accruals and deferrals?
Yep.
Who can tell me what an accrual is? Something I have not paid for? I buy land, debit land, credit mortgage payable. I haven't paid for it. It's not good enough. That's not accrual. Accrue anything about a piece of land, mortgage. Accrual. What do I accrue? And deferral. What do I defer? Accruals and deferrals of what? Revenues and expenses. Good. It's revenues and expenses, isn't it? Okay, could there be a cash revenue? What would that be? I deliver the goods or services right now, and cash revenue, yes. The credit revenue, because I deliver the goods or services, the earnings process is substantially complete. So what do I debit? Cash. I debit cash. That's cash transaction. Could there be cash expenses? Of course. I use up the goods and services right now. I debit expense, whatever it is, salary expense, rent expense. And I pay for it right now. So what do? Credit cash. Okay, what's an accrual of a revenue? What happened? Somebody tell me, come on. I feel like a total failure every time I deal with you people. New group. What's that? Okay, you perform the services, the earnings process is substantially complete, excellent. And you have a credit to sales or a service revenue or something, and what do you want to debit? Seeing as they haven't paid you yet. And you trust them to pay you later on open account. What is it? Not accounts payable. I sold accounts receivable. Okay, accounts receivable. Debit accounts receivable and credit sales. By the way, am I kind of mean? You thought I was mean in principles, didn't you? I'm going to be really mean now, because what happens is you quit thinking, and it drives me crazy. Don't do that. You're not going to be valuable when you quit thinking. You're going to be valuable when you think. Quit thinking when you have the beer or the bourbon in front of you, and you just relax. You don't even have to say anything, right? It doesn't matter what you do say. But when you're working and you're getting paid, think. 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 That's excellent. It's the first time you ever got anything right in your life, isn't it? I like that. That's good. Okay. Somebody tell me then what an accrued expense is. Sort of the same thing with an expense. Come on.
The payment that you need to make, but you haven't made it.
I haven't made the payment yet.
Yeah.
Why do I need to make the payment? Because I used something up, right? Wage expense. The people worked for me. I used up their work. It's gone. Because I used it up, it's now an expense, isn't it? Debit wage expense, right? And what do I credit seeing as I haven't paid it? Not accounts payable, it's wages. So I call it what? Wages payable, just by convention, right? Okay, yeah, wages payable. Absolutely. Okay, and then later when I pay it, what do I do? The wages payable, credit cash. This should be automatic. Just automatic. Just automatic. It's been a while since you had principles. Those of you where it's been a while, you feel better now because these people just had it. They don't know anything. It should be fine. Okay? Anyway. All right. Well, by the way, on receivable, what happens when they pay us? Debit what? What do they pay you with? Cash. Debit cash. Credit what? Accounts receivable. So this is principles 101. You're supposed to know all this stuff. Okay, let's do deferrals. Give me a deferral of a revenue. How about you? Can you do a deferral of a revenue? What is that? There is cash revenues, right? Debit cash, credit sales. Debit cash, credit service revenue, right? Debit cash, credit rental income, whatever it is. Okay? Right? That's a cash transaction, right? Where you earn the revenue and receive the cash, same time. Okay? What would be an accrued, what would be a deferred revenue? What happens? Deferred. What am I putting off? The cash or the revenue? The revenue. I'm deferring revenue. It's right in the name, right? Deferred revenue, which is also called what? Name for the account. No, prepaid's the other side. That's a deferred expense. It's a prepaid. Unearned revenue, right? Okay? Is this hard to keep straight in your head and keep thinking like this? kind of at first, and then after a while, it's just going to get, you're going to get in the groove. This is how we think, right? Everybody knows what this stuff is, and everybody knows what they're doing too. Okay? So unearned revenue or deferred revenue, what happened? What physically happened?
You receive the revenue, but you haven't.
I received the revenue? How do you receive revenue? You earn revenue. You didn't receive revenue. What did you receive? The cash. You received the cash. So you debit cash, but you haven't earned it yet. So what do you have? I bet I owe them something. What do I owe them? The work. So what do? Debit cash and credit what? How about unearned revenue or deferred revenue, whatever you want to call it, right? I have deferred recognizing the revenue until later. What do I mean by recognize? Do you know? Recognize something versus realize. What's recognize? Failure as a teacher every time. I really try to. I'm working at this. How about you? Do you know what recognize or realize means?
Recognize it on the books.
Yeah, you put it on the books. You record it. It's recognized. You put it in the financial statements. I recognize you, right? That's it. You know, people can see it. You put it in the financial statements. Recognize is record the journal entry to get it in the financial statements. Okay? What's realize? Realize. I realized it. Well, but it happened when you recognized the revenue or recognized the expense, didn't it? It happened. What didn't happen? Maybe you didn't get the cash or give up the cash. What's realization, everybody? The cash changes hands. Realization of a revenue is getting paid. Recognition of a revenue is earning the revenue and recording. Could those be at different times? Well, of course, that's what we're doing here. Same with expenses, right? When is realization of expense? When you pay it out. By the way, did you guys expect to do this today when you came in here, that I'd actually cover stuff and be mean to you? Everybody who had me for 101, the answer is yes. Everybody who didn't, get used to it. This is what we do, okay? Every day we do this, all right? I can get fired up, I can have caffeine. There's none in here, I don't need any yet, I'm not tired yet. Okay, anyway, so we didn't finish it yet. We would debit cash and credit unearned revenue. Then what happens when you earn it? I bet you have to recognize it. When you earn it, what do you want to credit? It's gardening service revenue. I do gardening out there, okay? Money doing, right? They paid me in advance. I debited cash and I credited unearned revenue. Unearned gardening revenue. What do I want to do when I earn it?
Burn cash, debit.
I want to do business with you. I love this man. Would you do some yard work? My house needs a lot of work there. I'll pay you, right? And then when you come and do the work, I'll pay you in advance. When you come and do the work, you give me my cash back. That's what you just did. How many want to do business with him? Anybody not take around now? Why do we all want to do business with you? What a great deal. You're going bankrupt fast, aren't you? You're not giving me my cash back. Come on. Right? Make yourself think. Okay, what do you think? You're not too old to think, are you? I'm double your age, at least. More than that. Come on. A lot more than that. Okay? I can do it. Come on. What happens? I earned the revenue. So what do I want to record because I earned it? Everybody help him out. It's gardening. I earned revenue. Credit what? Brilliant man. Okay, credit gardening revenue. What do I want to debit? Unearned revenue. Why? It's not unearned anymore. And what is unearned revenue? Asset, liability, equity, revenue, expense. What is it? It's a liability. What do I owe them? The services. Got it? Good. I can never forget. You'll hate me forever, but you'll never forget it. So that's what, I don't care if you hate me, right? I like you to remember it. You'll know it. Okay? That's what we want. So think about everything this way. Don't just read this stuff, you guys. What is it? What is it? Do I know what it is? Because Keith's just going to twist everything inside out. You have to know what you're doing here, okay? It's going to be frustrating as hell, and you're going to get really good at it, okay? Really good at it. We're going to turn you guys into professionals, right? Real professionals. You're like people that get paid well, okay? Real professionals, and they can actually deliver something. Okay, let's defer an expense. And I guess I'll have to tell you next time what's on the quiz. No, it's not time to leave yet. Why are you putting stuff away back there? You trying to confuse me? Yeah, I've walked 3.77 miles today, you guys. One good thing about being over here, it's only 5:34. It's distracting me. It's terrible. Not good. Okay, what do you think? We were doing deferred expenses earlier.
Yeah.
What's a deferred expense called? Now we lost it. Okay, what's a deferred expense called? What happens with a deferred expense? I deferred the expense. What happens? I prepay it. Yeah, guess what I call it there for? Prepaid, you know, like prepaid rent, I pay my rent in advance. Debit, prepaid rent, what's that? Asset, liability, equity, revenue, whatever they call it. It's an asset, debit and asset called prepaid rent, right? And credit, cash, of course. Now I use the building for the month. What do I do at the end of the month? Credit the prepaid expense because I no longer have it. You know, you used it, you paid for it in advance, now you used it, they don't owe you to use the building anymore, you don't have the right to use it. The asset is the right to use it, isn't it? Probable future economic benefit obtained or controlled by an entity as a result of a past transaction. There's a future economic benefit, I get to use the building, right, and not pay for it again. I traded assets. I got that asset, prepaid rent for my cash, credited cash. Okay, now what happens? I used it up. So you said credit prepaid? Rent, because it's used up, or somebody did. Debit what? Rent expense. What do assets become as we use them up? Expenses, of course. Why do you buy assets? Why do you buy building and equipment? To use them in an attempt to generate revenues. And as you generate revenues, those things become expenses. Everything but land becomes an expense, right? You know what? Building and equipment is just like prepaid rent. I prepaid for its use. And as I use it, what do I do to it? Depreciate it. Debit what? Depreciation expense. Expensing the fact that I used it up, right? Expensing is utility value being used up. And credit what? Which is a what? Contra asset. What does it reflect? Using up that particular asset. Why do I use accumulated depreciation instead of just crediting building or equipment? Why do I credit accumulated depreciation? Why? Why don't I just credit equipment or building?
Keeps the principal of the payment in a separate.
Well, no, this isn't an amortization of debt. Not a bad idea, but it's not amortization of debt going on here.
But I mean, so it keeps the initial payment separate.
It keeps the original, what was recorded for equipment or building, the original historical cost as the asset value. That's where you're going, right? Okay, and then the accumulated depreciation reflects what? The portion I have used. And the difference is what? The remaining book value. Equipment less accumulated depreciation, or building less accumulated depreciation, is the remaining book value, which is the portion I have not used up yet, right? Gives people an idea of how old my assets are, how much I've used up, how much I haven't. By the way, is depreciation reflecting using up market value or using up the historical cost? Using up the historical cost. Is that a good reflection of the true cost? No. Why don't we use the market value instead? It'd be a better reflection of the real cost. What do you think is more valuable to you? The market value of Young Brand stock right now, or the amount the original shareholders paid to buy stock? Which is more meaningful to you right now? How much it's selling for now, or how much the original shareholders invested to buy the stock? I think what it's selling for now. I mean, they're not going to sell it to you for that historical price. There's no way, right? It's worth a lot more now. So, why do we keep things at historical cost? This is where we're going, you guys. Why would you use historical cost instead of fair market values? Measurement issues. I don't know what the fair market value is a lot of times. I got a piece of land I bought in 1930 for $1 million. How much is it worth? I don't know unless I sell it. So what value do I keep it at? Historical cost. Finance people will tell you what? Finance people that don't understand accounting will tell you what? Well, that's worthless. You should tell us what it's really worth. No, I shouldn't. That's what you're supposed to do is estimate what it's worth. I don't know what it's worth. What are you going to do, appraisals on everything? What, how good is an appraisal? I don't know. It's as good as the appraiser. When do you know how much a piece of land's worth? When you sell it. That's it. What do? Sell all your assets so you can find out what they're worth every year? I kind of doubt it. Nobody's going to do that. So we're really caught in a quandary here. We'll talk a lot about this stuff, you guys. Okay? So really important to get a grasp on all of this. Okay, so they even went away. Okay, I will tell you what's on the chapter 3 quiz then, I guess, seeing as we still have time. Not much time. I told you I have to leave on time anyway because I have to go learn how, well, that's okay, completely. I have to learn how to teach first grade kindergarten to my grandchildren. So they're going to have to go in the classroom. I'll try to be nicer than I can to you guys. I'm not gonna swear, I hope. Catholic school, so I'll try not to swear when I'm reading to the kids or something. If I just read the words, that should be okay, don't you think? Probably shouldn't be any profanity in the books for kindergarten, first grade. Yeah, okay. If you knew on page 62, every one of these things you'd have it made for the first quiz. What if I asked you what, by the way, this thing's upside down. I don't know why we always put everything upside down, but in the conceptual framework for financial reporting, everything's upside down. It is, and that's how it looks. They put them upside down, the pyramids. Really the most important part is the stuff that's at the bottom and then it works its way up to the top. Does that make sense? First level at the bottom there, the why, purpose of accounting. What's the objective? If I asked you to write down what is the objective of financial reporting, what would you say? How about provide information about the reporting entity that is useful to present and potential equity investors, lenders, and other creditors in their capacity as capital providers? Write it down for me. I'll give you a point or two. I'm not kidding. By the way, this chapter 1 and 2 are all theory, and that doesn't mean the rest of the book's not theory too. It is, right? But this is just to get you the basis. And then what Alan Dyke's going to do in 212 is he's going to make you do these two chapters again and give you quizzes on it again. Quiz and test on it again. What would be a really good thing while you're learning it this time? Learn it, keep it. Stop doing brain dumps. I can tell that you guys did a brain dump after 101. How do I know that? Because when you took my final at 101, those deferral and accrual entries just got down on the paper, no problem. Where are they now? It's me. Stop it. Stop forgetting what you learned. Stop putting it away and forgetting about it. When you watch a movie, if you want to forget the movie, feel free. I watched a movie with my wife last night. The only thing I remember is it wasn't very good. If I thought about it intently, I can't remember the name of it, but I could probably remember sort of what it was about and why it wasn't good. That's it. You know what? Who cares? Who's ever going to ask me? Nobody. So I got my wife to ask her. You go look it up. How about those something you're going to use in your career? Come on, guys. You got to know it. You got to keep it. Okay? You got to be there. What if I asked you to give me definitions of all the elements? You know, I pick a few of them. Give me a definition of assets. Give me a definition of equity. Give me a definition of comprehensive income. Give me a definition of gains. Could you do it? I bet you couldn't right now, but if you flip back through the pages, so this is what you want to do. I'll give you an idea what you need to do. If you flip back through the pages over to page 53, for instance, know the key words. I told you what the definition of an asset was, right? Probable future economic benefits obtained or controlled by a particular entity as a result of past transactions or events. If you wrote that down word for word, I'd be thrilled. What if you change some of the words a little as long as they're not key ones? You know, the ors and does and stuff. That's fine. Okay? Probably it's just easier just to do it, isn't it? You know, here's the deal. If you know what an asset is, you can figure out what a liability is. Do it this way. So you can use associative memory. So you don't memorize all of them, really. Look at liabilities. It's not a future economic benefit. What is it? It's a future economic sacrifice. See it? Future sacrifices of economic benefits. Still present obligations, right? It's a present obligation instead of obtained or controlled by an entity of a particular entity, but it's always a particular entity in both of them. To transfer assets or provide services to other entities in the future as a result of past transactions or events, and that part is the same as assets. Now here's the deal. We just did it, you guys. Tell me what they mean. How could I have a situation where I transferred assets or provided services? What do I mean by transfer assets and settlement of a liability? What assets are the most common when you transfer people? Cash, of course. Could you give them other assets? Of course, right? It wouldn't matter. You can give equipment or something, right? Okay. What do they mean by settlement of a liability? What's that? What is that piece? Or services, providing services to settle a liability. What services? What are we talking about? What account's that? We just did it. It's unearned revenue. Absolutely. It is, isn't it? So you know there's unearned revenue, so put it in your definition, okay? Wow. That's easy, isn't it, all of a sudden? I like the equity one. Not bad at all. Is the residual interest in the assets of an equity that remain after deducted its liabilities? You mean assets plus liabilities is equity? Yes. Okay? In a business enterprise, the equity is the ownership interest. Now, would I define that as A minus L equals E and write it down in the CPA exam? No, I define it like that. Okay, so you need to say it's the residual interest, right? In the assets after deducting the liabilities. So, say it pretty close, okay? Get pretty close. It's going to be on the CPA exam, guys, in some fashion, right? So it's going to be on my quiz, it's going to be on my test, it's going to be on my class. Somewhere or in all three, or at least maybe two of them, yeah.
Can we use the definitions in the 101 textbook?
No.
I feel like these definitions are a little bit difficult.
Yeah, they are.
So, can I use 101 textbook?
No.
Those are simple.
These are the formal ones. Use these. They tried to make those easier on purpose. These words have specific meaning. Use these words. Okay? Now, any word that has specific meaning, don't change it, but the ands and does and stuff can be moved around. Sentence order can be moved around. It's not word for word memorization, really. But make sure you get all the points in there, all the comments in there. Okay? How about if I asked you, back over on page 62, how about if I asked you to do something like this? Under qualitative characteristics, compare and contrast relevance and faithful representation and tell me the components of each. That's under qualitative characteristics. What's the difference between relevance and faithful representation? Anybody have any relevant friends? Somebody you care about? Right? They're relevant to you? You care about them? Do you have any faithful friends? What does that mean? You can count on them? That's it. Relevant information is information that helps you make a decision. Right? Useful in that sense. What is information that faithfully represents something? You used to say reliable. I like that better. Reliably, you count on it. Faithful representation, it represents economic reality to the extent possible. I can count on it. Friend, you can count on it. It's really nice when you have a friend or a significant other where they are faithful, right? And they're relevant to you, right? You both like each other a lot. Okay? Kind of sucks when it's only one or the other, isn't it? They might be real faithful, but you're not madly in love with them, right? Or they might be worse, you're madly in love with them, but you can't count on them, right? You guys know what these things are, right? So what's the components in this? What are the components? What would I expect you to tell me? Would you know it has predictive value if it's relevant? That it has confirmatory value? That it's material? Under faithful representation, would you know it's complete, neutral, free of error? Yeah, this is simple, you guys. Okay? There's just nothing to do in this. Okay? So virtually everything that's there is what's in these first two chapters. No, everything that's in these first two chapters. Inside and out. Hand you a piece of paper, give you the opportunity to show me you know it. Some might be multiple choice. Wouldn't it be cool if I gave you a multiple choice question like this? Which of these is a component of relevance? And then I listed completeness, neutrality, free of error, and confirmatory value. I'm not kidding. They'll give you questions like that. If you could write an essay about it, could you answer a question like that? It's impossible to miss it. When you go sit down for the CPA exam, you're going to get a whole bunch of questions. You're going to look at it. Are you kidding me? Are there really people who miss this stuff? And the answer is yes. Oh, one other thing. In this course, read every single note at the bottom of every single page. Okay? Fair game. Because they'll take a whole lot of the more complex issues and they'll put them in footnotes. You want to know the complex issues, right? Because there might be a question about it. Not just this class, but life, right? On the CPA exam, too, of course, right? By the way, the CPA exam is a tiny subset of what you need to know for your career. It's minimal. It's not a big deal to pass the CPA exam. I did it. Alan Deck did it. Come on. Richard Schrader did it, right? Big deal. Every accounting professor you're going to have here, pass the exam. So what? Our students all pass it. It's no big deal. You will too. But it's work. You have to accumulate a knowledge set, okay? You're going to get there. Right? Anyway, so read everything at the bottom. Oh, appendices? Do we ever skip an appendix, you think? Of course not. It's in the book. Why wouldn't we take advantage of it? You bought the book. Let's learn it. Okay? I'll see you guys. Have fun. Work. stick around and bullshit with you after class, but I really do have to go.